SEED Innovations is the AIM-quoted investment company offering exposure to disruptive high-growth life sciences and technology ventures. In its recent full-year results, the company told shareholders it is optimistic about the outlook for its portfolio companies. I'm delighted to be joined by the Chief Executive, Ed McDermott. So, Ed, before we talk about the portfolio, the company has got a history of generating liquidity events such as the recent share buyback program and the special dividend. So how successful was this? Would the company consider doing this again? How well was it received?
Hi, Sarah. I think the buyback was received well, as would normally be the case. I think we obviously went out with a view to try and buy 10% of the shares in issue, and we achieved very nearly that. But crucially, we achieved the purchases at a very steep discount to NAV. So I think that was good. And then, of course, moving on to the special dividend, I think paying a 1p per share dividend when the share price at the time was around about 2p was also very well received. So paying a maiden dividend is hopefully something that we'll be able to repeat in the future.
Of course, the company paid that maiden special dividend after the sale of Leap Gaming. So I was going to say, is another dividend on the horizon, or would another divestment need to occur before this happens?
Well, look, we have cash in the bank at the moment, and obviously we are looking at a number of opportunities, and we've come very close to investing, as we mentioned at our recent AGM presentation. And of course, we're hopefully not too far away from investing some of that capital. But of course, with capital in the bank, if, for example, we weren't able to find something that we felt was appropriate and offering the big return on investment that we want to see for our shareholders, then of course a special dividend could be utilized from that. But equally, future divestments could also result in other special dividends.
Okay, so before we talk about potential acquisitions, new entrants to your portfolio, I want to talk about the current portfolio. Several cannabis-related companies there, including Northern Leaf and Little Green Farmer. Is it fair to say that there's a lack of sentiment for cannabis stocks and that might be impacting your portfolio performance?
To be honest, I don't really think so. I mean, let's look at the two things separately, because I think that's important. I don't think that our share price is specifically correlated to the cannabis industry, because although cannabis represents a reasonable percentage of our portfolio, around 40% of our net asset value, largely due to Exchequer, I don't think it's in its own slump, shall we say. I think there's huge amounts of industries are suffering as a result of lack of liquidity, of particularly, let's look at the UK, for example. Everyone is waiting till the end of this month to see what nasty surprises Labour have where it comes to taxation, inheritance tax, capital gains. So that's obviously stifling junior markets as well. But if we look at the global landscape of cannabis per se, we're not only investing in cannabis. It's part of our portfolio and an important part of it, but certainly we don't align ourselves and our future entirely to how the cannabis market is viewed.
Okay, so remind investors about the current portfolio. How many constituents do you have, and why have you selected the constituents that are currently residing there?
Well, look, there's obviously some smaller assets within the portfolio. So what I'd rather do to make things useful and more, I suppose, educational for either new investors, and also just to give a bit of a refresh to existing investors, our top three portfolio assets are worth more than £6 million alone. Obviously, our market cap is currently trading at less than cash. But if we look at the constituents of those of that £6+ million of valuation, and by the way, these are all companies that have in recent times raised money at premiums to Seed's entry point. You have Juvenescence, which is our second largest portfolio asset, that is in the business of life sciences and particularly focused on the diseases of aging, so longevity. That's a Jim Mellon, Greg Bailey vehicle, shall we say. And again, huge amounts of money has been raised by that company, and I should add that historically, Jim, Greg, they've floated very, very significant companies, on NASDAQ where they've achieved north of $10 billion exit values. So although it's been very slow for us, for Seed specifically as an investor, you cannot write that sort of business off. And again, as long as it continues to be able to fund itself and they do it at premiums to where we're invested, we're largely happy with that. Of course, we would love to see a liquidity event on that, but that's something that we can't control. Avextra, which is our largest asset and a cannabis specific asset, is something that we've already had a partial exit on. And that partial exit effectively, a couple of $100,000 shy of our total investment. So at the moment, we have more than that, again, as carried value in Avextra. And again, that's another company that has continued to raise money at premiums and see support from both existing investors and new. Then we have Clean Food Group, which is a company that I'm also a co-founder of, and that company's been going from strength to strength. Just yesterday, there was an announcement that the Hut Group has got into bed, shall we say, with Clean Food Group, and at this point, it's just a collaboration, but of course, that could lead to very good things. That, with regards to Clean Food Group, is on the cosmetic side of life rather than the ingestible food ingredients. So again, I think it's showing the ability for a company like Clean Food Group to be diverse and be across multiple verticals within effectively the same products. So I think shareholders are really missing a trick, and investors at large are missing a trick. We are, as I said, trading at less than cash in the bank at this point in time. We have about £3.5 million of cash in the bank, and just our three largest investments are well over £6 million and have, I think, justified their position as being of that value.
I'm fascinated by the recent diversification of your portfolio because you recently invested £250,000 in AIM-listed oil and gas company Pantheon Resources. How bold was that, particularly as the new government is allegedly focused on decarbonisation and committed to not issuing any new oil or gas exploration licenses?
Well, I mean, my personal view, and I think a lot of people across the city, and I suspect many people sitting at home paying enormous energy bills, that's probably a different conversation, but I certainly think the government have taken a very stupid approach to that. It doesn't really affect Pantheon. Pantheon's assets are over in Alaska, and the reason that we've invested in and taken a position in that placing was we believe there are a number of catalysts as to why Pantheon could move very rapidly. It has a very good liquidity profile as things stand, and it's very much part of our short-term trading strategy. So this is not a company that we are in love with. This is a company that we are looking at as a trading instrument, effectively. And as I said, there are catalysts, upcoming drilling programs, etc., on a very large asset with huge potential. And I don't think the UK government has a major effect on whether that share price increases or decreases, quite honestly. Oil price, yes, but certainly I don't think the UK government have a huge amount to play in it. But again, crucially, let me spell it out. There are two strategies within Seed. We have our traditional and more important venture strategy, which is longer term. And when I say longer term, that can be anything from a year to 3 years. We want to try and keep things to less than that. But of course, when markets are difficult, you have to sometimes be patient where it comes to liquidity events. And then we have our short-term trading strategy, which is agnostic as to sector and allows us to utilize up to 20% of our net asset value to try and generate short-term returns. And that is anything sub 1 year. It could be anything from days, weeks, months, but certainly it's not going to be more than a year.
Okay, so I'm getting a feel for your investment criteria. So it's sector agnostic. And in terms of acquisitions or investments that you're hoping to make, are conversations ongoing? Are there some opportunities out there which are close to being sealed?
Look, capital is very constrained across the market in general. Anything growth oriented, even if it's a really, really good opportunity, those opportunities and those entrepreneurs are finding it very hard in many cases to raise any capital. So we're in the driving seat where it comes to that. We are sitting on cash, and our goal, very simply, is to make sure that we negotiate the absolute best entry position for us, for our shareholders, and make sure that we put ourselves in the best possible position to generate the largest ROI. There is, of course, a balance. One has to work with these companies, but critical things to us are, and things that may have been missed in the past by, this company and its former guys, are things like the operating agreement, the shareholders agreement. Those are crucial things that made it, when I stepped in, it was incredibly difficult with regards to Leap Gaming, for example, because there was this very odd situation where we had a large position, but we had the rights essentially of a minority. So I won't let that happen. And our goal is absolutely always to make sure that we get our absolutely best entry price. Everything is about what you pay for it. If you pay the right price on the way in, you'll always get yourself into a position, or if the company is somewhat successful, you will certainly get yourself into a position where you can negotiate your way to a good liquidity position.
So you and your chief financial officer have confidence in the business. I'm sure all the board has, but what were the most recent director buys and why?
So I've always made it very clear that I want to own more of this company. I never thought I was going to be able to buy more shares at this price. We have very limited windows in which we can buy shares for a number of reasons. One being closed periods, which are the official accounting periods, and two, the fact that we have a portfolio that is often in negotiations, and we're often looking at companies and can sometimes be at term sheet stage with them, which obviously would mean that we were pregnant with inside information. So quite often it's not even something we can do. It's not like being a retail shareholder where you can buy shares on any given day, as long as the market's open, if you so wish. But certainly, both in the case of myself and Lance, I wanted to get north of 3%. I'd like to get even higher than that when liquidity, my own personal liquidity, and the opportunity, the dealing window is open, which, as I said, is very short. And certainly in the case of Lance as well, I don't want to speak for him, but he's obviously bought shares because he believes in what we're doing. And we believe the company is extremely undervalued. Ultimately, we're buying shares at less than cash, but cash in bank value, with absolutely no value whatsoever given to, in our view, some very exciting portfolio assets. So that's, I guess, all I can say on that, really.
Okay, so I'm going to allow you to summarize what's the plan for the rest of 2024?
Well, as I mentioned already, we've come very close to making some investments. Some of the conversations that we've had, as long as over a year ago with companies who didn't like the terms that we put forward, are starting to maybe become a bit more sensible and realize that capital markets are very, very difficult and very hard to get the capital they need in order to grow. So a lot of those conversations come back round to us. And my hope is that we will be able to execute on certainly one or two things before the end of the year. Again, that is not a commitment to definitely being able to do that, because, of course, it depends on detail. But ultimately, our goal is to be investing money and making sure that we make excellent returns. With the existing portfolio, there are certain assets that we're looking for liquidity events as soon as we can. But equally, when markets are difficult, that's not necessarily the time to be selling assets. So it's very much dependent on specific assets, specific industries. But ultimately, the goal is always to make sure that we generate big return on the cash that we have available.
Ed McDermott, Chief Executive of SEED Innovations. Thank you very much indeed for joining us.
All the best.